Welcome, everyone. Good boy, Tucker. This is learning at its most fun.
Good morning, everybody. Thank you for joining us for another Building Your Tech Stack with Redtail CRM. Today, we have how Stratify and Redtail work together. Manage the right risk and educate your clients. And so today, we are going to be exploring how to empower your clients to easily understand risk and take action with Stratify. So we know that it's a given that risk differs for all investors depending on where they are in their financial lives. Today, we're going to learn how Stratify can help you better understand, track, and provide advice and action against current risks facing clients' portfolios effortlessly. We'll share best practices on how to communicate risks and insights to bridge the gap for your prospects and clients. And to help us with that, joining us today from San Jose, California, we have Karan Batrada. Karan?
Yep. Hey, how are we doing, Austin?
Doing great, Karan. Thanks for joining us again. Hey, before we get started to the action, I just wanted to let the audience get to know you a little bit more. Can you tell us about your role at Stratify?
Yeah, absolutely. So by definition, I'm the account executive at Stratify, and work closely with advisors really located everywhere. I was looking through the participants and noticed a couple of our customers, so they can speak to the fact that though I do work in sales, I'm very much involved with the relationship management as well. So, after we have customers that use Stratify, I really love to be involved and make sure that they're finding success using the system and finding ways that I can help them, however that might be.
Awesome, Karan. And I'm glad to hear that we have some familiar faces in the audience. For those of us that might not be familiar with Stratify, can you give us just a brief summary of how Stratify came to be?
Yeah, so really it all started with our CEO, Akil Loda. By definition, he's a computer scientist and a quant, and he, worked out in Wall Street. Really, long story short, and I'll keep it very brief, he had information to different data models, tools that not many other advisors had. And he felt that, advisors really need this information in the best interest for their clients. So he set about to really develop Stratify and provide advisors with a tool to help them educate their clients on the risk in their portfolio.
Awesome. So Karan, if you had to summarize, what do you feel is the main problem that Stratify solves for the advisor or their client?
It's really about empowering clients to make responsible decisions, based on whatever their investment objectives might be. We don't think that risk is necessarily a bad thing. It's really just about understanding how much risk the client is capable of taking and making sure they're comfortable taking that amount of risk. So I'd say really the biggest thing for us is we want to be used as an education tool for the clients.
Awesome. I think we can all get behind that and be something we're interested in helping us with the risk conversation with our clients. So Karan, could you maybe give us a demo on how Stratify works and how we can manage this risk conversation?
Yeah, my pleasure. So I've got this screen shared. Austin, you can see it, correct?
Yes.
Of the slideshow?
Your screen, we're looking at the slide deck right now.
Perfect. So I'll just quickly jump through this a little bit, and then we'll focus on one key aspect of the system. So let me go ahead and click into here. So what can you really use Stratify for? And what are the benefits for the advisors? And it really drills down into 4 key points that advisors use Stratify for. One would be closing more prospects and having a way to kind of differentiate themselves from other advisors. Another would be lower the investing stress and making sure that you and your clients are on the same page. Then, of course, there's enhancing compliance oversight and making sure that, not only are your clients in line with their investment objectives, but the advisors at the firm are also in line with what their clients' investment objectives are. And then finally, we look at reducing business risk. Now, I know that's a lot of, 4 vastly different points. So in today's call, I just want to focus on how you can use Stratify with prospects. And we went ahead and created this little image, and I think it really summarizes how you can use Stratify with prospects extremely well. A lot of advisors that I personally work with, before they came over to Stratify, mentioned that they spent hours, maybe an hour, maybe a couple of hours with the whole process from start to finish to create a proposal for their clients. And the other part about that proposal is it might not really include all of the assets for that prospect. With Stratify, I want to show you on this call how quickly you can generate a perfect proposal with 100% of the assets, whether you're managing all of them or some of the assets are held away. With that being said, let me go ahead and share my screen to the platform. All righty. Awesome. I know I can't hear everyone else. So are you able to see the platform right now?
Yes, we're looking at the dashboard for Stratify.
Fantastic. So like I mentioned, for this, I want to keep it at a very high level. I just want to show you guys the start to finish process for how you can generate a proposal for a prospect. And as some of the advisors on this call know, the proposal is probably the feature that they use daily with their clients. So I'm going to go over here and click add a prospect. And let's go ahead and keep it simple. I'm not too good with coming up with random names. So I usually go to Peyton Manning and I'll go ahead and say peyton@gmail.com. And over here, we've created a prospect. So what I want to do next is assess the risk tolerance. And in the interest of time, I won't go through the questionnaire, but in the Q&A, if you have any desire to see what the questionnaire would look like, feel free to drop your email or, I'll drop my email and you can reach out to me and I'm happy to send over a copy of the questionnaire. Now, with regards to the questionnaire, we have a couple of options. You could answer it on the platform with your prospect in person. You can copy the link, send it over to them from your own email, or you can send an email straight from the system. You could download a PDF, do it that way, or you could enter the score manually. And what I usually see advisors do is, if they've spoken with this prospect before, they have some sort of understanding of where the prospect's risk tolerance should be, they'll kind of put in a score as a placeholder. That's what I'll do for the purposes of this call. So I'll just go ahead and say 7.4. So now I've updated the risk tolerance. In this drift exceptions and notes tab, I do want to just show that by doing so, the system will automatically drop a compliance note. And that's kind of the beauty with working with Redtail so that these sync up. But the system will drop a compliance note that on this date, the risk tolerance was manually entered by me and it was set to 7.4. So we've got the risk tolerance. Now let's go ahead and add an account. And we've got a couple of options with a prospect. And I know, for an advisor, you might be getting a statement from a prospect. They might have access to a CSV file, or you might want to digitally link their account. So you have a couple of options. A lot of advisors will use this to bring in all of the assets for the prospect and give them a holistic view of the risk in their portfolio. For this call, I'm just going to go ahead and upload a CSV file. And I'll go ahead and map it. So we've got ticker to ticker, amount to amount. We'll go ahead and view the account. And all of my securities are populated over here with all of the different dollar amounts. Let's go ahead and just call this the brokerage account. And we will be on our way. Now, as this is generating, and it usually takes about 10 seconds or so, if any advisors in the meeting right now, if you guys use a proposal generation tool, if you have some things that you love about it or you don't like about it, feel free to drop it in the chat. I'm always curious to understand, what tools advisors are using and what challenges they might be facing or what they might love about the tool. So now I've got the portfolio risk score for my prospect, and it's coming straight from this brokerage account over here. I've got the risk tolerance score. What I want to do on this call is just show you how easy it is to generate a proposal for this specific prospect. Now, there's a lot of meat behind the scenes with regards to how we're calculating the portfolio risk score. And those are things I'd be happy to touch base on another call. For the purposes of this, let's say we've gone through this. We see it's an aggressive risk portfolio. And I know that I have a model that suits this risk tolerance score. So I'm going to go ahead to generate proposal. And now over here, we've pulled in the brokerage account. Let's just go ahead and say the starting value is $1 million. And we want to show our prospect what would happen if we looked back at this portfolio from 2008 to today, assuming you started with $1 million. We'll leave the management fee as is at 1%, and you can also input the yearly withdrawal rate, and I'll show you what that's for. What I'm going to do is I'm going to keep it at 0%, and this is for our sequence risk analysis. Next, I'm going to go ahead and select the model. Now, by default, it will recommend a couple of models based on my prospect's risk tolerance score, but I do have access to any of my other models as well. So I'll go with this moderate growth model. I'll go ahead and call it moderate growth. And then for a benchmark, I know advisors love to have a benchmark with their proposals. We do have some preloaded securities over here, or you have the ability again to use any of your models as a benchmark. Finally, when I go to select my proposal, I do have different templates, and really you have the ability to set up these templates in our settings section. But the beauty of it is you're not limited to the language that we use. Heck, if you even want to add your own custom sections, feel free to do so. So I'm personally working currently with an advisor who is specifically working with pitchers in the MLB. So, the language for him might be a little bit different than maybe a CEO of a company. So you would just select whichever template you've created, and then you go ahead and generate the proposal, and it'll pull in that language. So there's a lot of customization with our reporting. Okay, so I'm going to do a quick run through of what a proposal looks like. Now, at a very high level, the first thing you're going to see is the current portfolio risk score and the risk tolerance for our prospect. But then you're also going to see the PRISM score for the model that we're recommending to our prospect. And right off the bat, you can see that it's very much in line with the prospect's risk tolerance score. Then we're going to go through the matching models. Now, this becomes very important when you're looking at multiple accounts. But in this scenario, we're just showing that we have the brokerage account over here. We're recommending 100% allocation to the moderate growth model. Now, this is just a glimpse into how we're actually calculating our PRISM score. And this is really how we differentiate ourselves from, other competitors. Now, at a very high level, I'll just show our PRISM score is composed of 4 different risk factors, 2 of which are focused on the downside and 2 of which are focused on the upside. In this scenario, all we're showing our prospect, we're reducing the tail event risk and we're reducing the volatility risk compared to their current brokerage account. We have an up and down capture comparison, so we're looking to see how the portfolios would react over the next 12 months. Then we go through the holdings to show them the differences between the sectors. Now, you do have the ability to show the individual holdings as well, but I've decided to keep it at a high level. And now we finally get into some risk metrics. The first thing we're going to be looking at is the potential downside of the portfolio going back to the date that we selected. So going back to January 1st of 2008, we can see what the max drawdown has been of the current portfolio, of the model we're recommending, and of the benchmark that we selected. But then we want to show our prospects a quick summary. So over here, we're showing them, if you started with $1 million back in 2008, what would be the value of your current portfolio? What would be the value of the model we're recommending? And furthermore, we're going to show them the annualized portfolio return, the annualized portfolio risk, and the differences. So as we can see at a very high level, we're increasing the annualized portfolio return while decreasing the annualized portfolio risk with this specific recommendation. Now, those numbers are great, but I'm sure as a lot of the advisors on this call know, your clients love something that's visual and very easy to understand. So we have a performance chart where in the performance chart, the blue line would be the model we're recommending. The purple line would be the benchmark, and the gray area is their current portfolio. And once again, this goes back to the date that you select. Then a couple more factors we're going to look at are the historical return and the portfolio risk. The historical return, we'll look at it on an annualized basis, then 1 year, 3 year, 5 year periods, and since the date that you select. And for the portfolio risk, we look at the annual portfolio risk, the Sharpe ratio, the max drawdown, and time to recover from that drawdown. And then the upside capture and downside capture will always be of whatever benchmark you end up selecting. Now I'm going to go ahead and skip over this for just a quick second and show you the last section that we have by default is the cost analysis section. And we're looking at the average expense ratio and the total expenses. And now coming back to this, the sequence risk for retirees. What we're looking at over here are two different outcomes. In the potential best outcome, we're looking to see if the client retired into a bull market and that's followed by a bear market. But on the flip side, we want to see the unlucky scenario if they retired into a bear market and that's followed by a bull market. Now note that the yearly withdrawal rate over here is 0%. So let's just quickly see what would happen if I changed it to 5%. I'll go ahead and let that generate, and let's just see how that would affect that sequence risk for retirees. And in the potential best outcome, there's not too much of a difference with regards to how both portfolios are performing. It's in the potential worst outcome where a conversation might be needed with the prospect. And as we can see, the moderate growth model is kind of hovering around that $500,000 range. It's the current portfolio due to the risk in the portfolio and then the amount that we're going to be withdrawing from the portfolio that actually ends up drying out of money within about 15 years. So as you can imagine with your prospects or clients that might be nearing retirement, this could be a very important chart to look at and make sure that they understand the risk of their current portfolio and how they're currently invested. So I just wanted to go through the proposal on this call. One thing I would note is what the report would look like. And I've gone ahead and actually generated a sample PDF. Now over here, what I wanted to highlight really is the color scheme and the logo. It's really customizable to the firm. So the firm will have the ability to add in a primary and a secondary color so that they can customize the way the report actually looks. And then from here, we have all the sections that we covered. But then I want to show you towards the end. Now you can add in your own custom sections, and you can even add in your own custom sections in between any of our existing sections. If you don't like any of the sections that we have, don't fret. You can take it out of the proposal. So there's a lot of customization with regards to the reports that we can generate on the platform itself. And that's really what I wanted to cover on the platform side of things. But Austin, I think it might make sense for them just to show really how we can connect Redtail and Stratify.
Yeah, absolutely. I'm sure we're all intrigued about that integration. So if you could show us the integration setup between Redtail and Stratify.
Absolutely. So really, it's as simple as this. You go into the settings, click on integrations, and then you'll see Redtail over here, and you simply just click connect. And now you have the ability to pull in clients, households, and prospects from Redtail into the Stratify platform. And then from there, you can kind of get to work. So I'd simply just, select all, click connect, enter in my credentials, and that's all the work you got to do. So I did want to show how simple and easy that could be.
And Karan, will that pull in contacts as well as their account holdings?
It will pull in whatever you select. So you have the ability to select clients, households, prospects. I believe with the clients, it does pull in account holdings as well.
Awesome stuff. Thanks, Karan.
My pleasure. All righty. So obviously there are other aspects to the system, but in the interest of time, I just wanted to cover the proposal generation, and I'll kind of turn it back to Austin.
Karan has been very kind to share his meeting calendar with us. So if you'd like to connect offline with Karan and talk through your questions regarding the integration or Stratify platform itself, please book a time with Karan, and he'll be happy to meet with you and discuss. Karan, any last minute thoughts, questions, concerns?
No, I really appreciate your time, Austin, as well as everyone that was on this call, and look forward to our continued partnership with Redtail.
All right, us too. Look forward to a continued great relationship, and I hope everybody has a wonderful rest of their day. Thank you.
Thanks, everyone.
Thanks so much for joining us today for this particular session. If you have any questions, please don't hesitate to give us a call at 800-206-5030, option 3 for support, or just shoot us an email over to support@redtailedtechnology.com. Thanks a lot and have a great day.